Hey everyone, Kevin here. Boy, with all the crazy news going on, it is a wonder how we're possibly gonna keep track of it all. Well, that's what you subscribe to the channel for. Today, I'm gonna talk to you about a crazy new program that the Federal Reserve announced that could actually skyrocket a few stocks that I found that perfectly line up to use what the Federal Reserve just announced. Now, no guarantees that those stocks are gonna skyrocket, but let me introduce this program to you because it's not being talked about much in the media right now. In fact, a lot of us are focused, understandably so, on ourselves. Our stimulus check, where's our EIDL grant? Come on, our $1,000 to $10,000, that was supposed to be 10 grand, right? And then we've got small businesses focused on the PPP, companies with less than 500 employees. Well, the Federal Reserve just approved something for all companies between 1 employee to 10,000 employees. And a lot of companies under 10,000 employees are listed on the stock exchange. I guess I shouldn't say a lot. I should say a lot of companies over 500 and under 10,000 are listed on the stock exchange, which creates some opportunities for us, given that they're about to get some of that sweet, sweet helicopter money too. All right, let's get into this. Oh, and also I'm expecting Monday to be a crazy day in the stock market, so make sure you click the link down below and join me in my live stream that I'll be doing a Monday morning so we can cover the market together and talk about it. The Federal Reserve just announced the Main Street Lending Program, where they will offer up to $675 billion in loans with 4-year terms with interest rates between 2.5% to 4%, depending on what the Federal Reserve's rate is. That's why I put plus, but it's 0 right now, so 2.5% to 4%. For any company with less than 10,000 employees or less than $2.5 billion in revenue, which then we start thinking to ourselves, which companies qualify for this? And since it's a loan, which companies qualify with these criteria here, less than 10,000 employees and less than 2.5 billion in revenue, that are also listed on the stock exchange, that are also in desperate need of cash, and that have also been pummeled with the risk of bankruptcy. In other words, here's a potential safety net for those companies. Let's get into those. Oh, and just a heads up, even though this is called the Main Street Lending Program, you have to borrow at least $1 million, and on top of that, you have to pay it back. So this is not another paycheck protection program where you get a forgivable loan to maintain your payroll. This is more or less for the companies that you would find on Main Street. They're not talking about the house you live in. So here's how I began the search, and then I'm gonna break down some of my favorites from this. The easiest thing that I started with is I went to the Russell 2000 index. That is an index of a bunch of small cap stocks. So it's kind of like shooting fish in a barrel because most of these companies qualify. Most of these companies have less than 10,000 employees and less than 2.5 billion in revenue. Now, just a heads up, this is revenue, not net income, which if it was net income, way more companies would qualify for this. But unfortunately, this is revenue. So let me start by possibly the elephant in the room, because there's a particular company whose stock is basically going to zero because there have been a lot of news articles about them potentially going bankrupt. AMC Theaters. So here's what happens these days when you just Google the letters AMC, like the movie theater chain. AMC Theaters in talks to hire bankruptcy law firm. As shutdown lingers, AMC movie theater chain faces bankruptcy. Blah, 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 blah. More of the same. This does not look very good for AMC. And if we pop in the stock has been quite punished. It's selling for $2.60, which puts it in penny stock region. And look at this. Ever since they listed in 2013, they have lost 86.7% of their value. Wow. And so this was the first company that came to mind. I thought to myself, okay, if the Fed's printing money, usually that increases asset prices and equities, which happen to be exactly what stocks are. So, if not many people are talking about the Main Street Lending Program, then maybe there's an opportunity to invest in some companies that potentially qualify because they have less than 10,000 employees and less than 2.5 billion in revenue, and potentially invest in those companies, buy some stock, because they now have a safety net. Not saying they need to necessarily take on more debt or want to, but at least you have this as a safety net. Well, unfortunately for AMC, in 2019, they brought in $5.4 billion in revenue, which disqualifies them from this program. That does not mean the Fed is not going to swoop in and rescue them anyway, but this program, not looking good for AMC. So here's the list of stocks that do look interesting. Number 1, my second childhood home, Dave & Buster's. Dave & Buster's stock was originally listed in 2014 for $17.48. It's been up and down on a roller coaster, going as high as almost $70 per share. It's had its share of ups and downs, but it's usually been around $40 per share, at least in the last year and a half. And even before that, it really hasn't averaged below $40 since around 2016. But recently, it has plummeted in value almost 70%, down to $14.68. We can actually see here the Motley Fool has an article that says Dave & Buster's has slashed cash outflow, so their expenses, to $7 million each week, so that's their burn. They say they have $100 million in cash right now, but here's the problem. Dave & Buster's is a place you go to and you touch everything. $100 million divided by $7 million a week in burn leaves Dave & Buster's only 14 weeks of cash, which is just over 3 months. In other words, Dave & Buster's potentially has a safety net with this Main Street lending program because they only got 3 months of cash and then they're essentially out. So that actually makes Dave & Buster's stock a potential opportunity. We'll see how it performs on Monday, if there is an actual buying opportunity or if everybody watches this video and it skyrockets. Now, Dave & Buster's does also offer a dividend, but if you were to accept one of these loans, the Federal Reserve does attach some strings. They say borrowers must follow compensation, stock repurchase, and dividend restrictions that apply to direct loan programs made under this act, which FYI, a business could, like Dave & Buster's, could take out the Paycheck Protection Plan and a Main Street loan if they wanted to. The Main Street loan seems to be a little bit larger, a little bit more of an opportunity, longer term play. So you could use the Paycheck Protection Program as a business like Dave & Buster's to keep your employees employed, which is good because then you have staff once this is all over. The last thing you want is to have to furlough your staff. Your staff goes and finds a different job. Then it's, hey, let's reopen. Oh crap, I don't have any employees left because they all went somewhere else to do work at home gigs or start 3D Matterport scanning businesses, like the video I made the other day. Now, I'm always a fan of doing a quick little fact check, so you could type something in quickly, like how many employees does Dave & Buster's have? Oh, there we go, 2,200. So they qualify there, and then of course we could do how much revenue did Dave & Buster's have in 2019? And we had 1.3 billion in revenue around in 2019, which is great. That means they qualify for Main Street loans. Sweet. Safety net. More helicopter money. But hey, you know what? Look, whether you like helicopter money or you're one of the people on Instagram going, man, this helicopter money is a ripoff. It's bailing out companies. Like, I'm not trying to debate with you whether it's right or wrong. I'm just thinking about where to put my money. Let's talk about some other stocks. So by the way, if you want 2 completely free stocks, make sure you use that link to Webull so you can get your 2 free stocks. Just remember to deposit at least $100 and you get those 2 free stocks. Here's a stock that has risen to massive popularity over the last year. It is a company taking advantage of the solar industry, and I actually have their products on my roof, and it is Enphase Energy. Enphase Energy creates solar products. Their stock has done very well over the last year, which to me doesn't make them as exciting to potentially invest in because I'm not seeing those fat declines. I mean, from their peak here to where they are now, they've lost about 30% in value. So maybe there's still an opportunity here, but we have to ask ourselves, is it better to dive into something like Dave & Buster's that has lost significantly more than Enphase. Enphase, by the way, creates these awesome little micro inverters for solar panels. I have those on my roof. They are a wonderful product. I have the Enphase app on my phone. I do love the company. I will say, though, that Tesla Solar does not use Enphase, and Enphase also creates a direct competitor to Tesla's solar wall. So if we see more of a prominence in Tesla Solar, we might see a little bit of a decline or some more headwinds for Enphase to be able to grow. It does qualify with having less than 10,000 employees, and its revenue is also significantly under $2.5 billion. So we have a safety net for Enphase if you're interested in Enphase. Now, in the event that you're vying for a theater chain, you can forget about the first, second, and third place, which is AMC, Regal, and Cinemark. All three of these have substantially more than 10,000 employees and substantially more than $2.5 billion in revenue. Well, I guess with the exception of Cinemark, which comes in at $3.3 billion in revenue. But unfortunately, that means they don't qualify for Main Street lending. But if we go to position number 4, we will find the Marcus Corp. Here's an example of a Marcus Corp theater. Just a heads up, if you're interested in Marcus theaters, you have to buy the stock Marcus Corp, which means you're also getting their hotel holdings. However, they appear, and I mean all of this, I believe all of these companies would qualify for Main Street lending. Again, not saying they're definitely gonna take it, but this is a nice safety net to protect from bankruptcy. And here we go, Marcus Corp currently trading at $13.07, substantially lower than even their 2016 stock price, around $20 to $25. However, we've seen some lows here coming out of the recession. We've seen some of these prices before, 11, 12, 13, 8. So only recently did we really see a run-up in the Marcus Corp stock. They also have a dividend, which might get slashed if they needed to take this Main Street lending program. But hey, you know what? If AMC goes bankrupt and they go into restructuring, realize too, that's gonna look good for Regal, Cinemark, and the Marcus Group, as people have less choices to go to theaters, assuming that while this restructuring happens, the AMC theaters are like, oh, we just lost most of our employees, now we're restructuring the corporation, when can we open our doors? Way later than everybody else. Now, in case you're interested in speculating in real estate, KB Homes might be an option for you. However, I will say, rather than speculate in new construction homes, which I don't recommend anybody buy right now, I would much rather see you join me in my 0 to Millionaire real estate investing program, where you could actually learn how to go from a net worth of 0 to a real estate millionaire, because that's what I did. You'll also get to join me in my private daily live streams every single day that the market is open, where I talk about stocks, where I talk about things like this, where I talk about real estate, and where I help you analyze your deals. Look forward to seeing you there. Use that coupon code down below. Now, if I convinced you to stay away from KB Homes and join my courses instead, here is the Tupperware brand for you. If you wanted to get yourself involved with an MLM, you could look into Tupperware. Their stock has absolutely been wrecked. Look at this. In 2009, at the depths of the recession, Tupperware brand was selling for $13 a share. Back in 2003, they were selling for $16 a share. Right now, they are selling for $2 a share, which is down from their 2008 peak by over 96%. Absolutely insane. Tupperware's revenues in 2019 were $1.7 billion, which means that they would qualify for a Main Street bailout. And I guess they're not really bailouts, they're just loans that the companies have to repay. But there's a cash crunch right now because of this disaster going on. Companies need access to cash to stay afloat. It's just like the CEO of AMC, who went on multiple news stations on March 23rd, I believe it was, mentioning, hey, we need cash. There's no question of our ability to repay, but without cash, we will be forced into bankruptcy, essentially. He didn't use the BK word that long ago, but he basically implied that. So this was actually one that really surprised me. I thought for sure they might not qualify, but I guess it makes sense. The Denny's Corporation is selling for $9.94 per stock. They are down from their peak in 2019, over 56%. However, what I don't love is that they've been at this pricing as recently as 2014 and 15. Yeah, they've had some growth recently, but I mean, look at this history here. They were selling for under $1 at some point. When they first IPO'd, they were selling for $9 and just promptly plummeted. Not one that I'm super confident in, but here's another one that I am confident in. Redfin. Redfin stock, it appears, would also qualify in the event that they needed more cash on hand. Redfin stock IPO'd for $21, and they have had a little bit of a volatile ride at $18.52. I'm not super bullish. I had made a video a few weeks back buying them for $10 a share, which I'm very grateful for. Here's Yelp, who just laid off and furloughed over 2,000 people. Yelp has had one heck of a ride. They have had such a hard time getting a start out here in the market. They were really specced up shortly after they first IPO'd, but they have been on a roller coaster ever since. It is interesting though, Yelp would qualify in the event that they needed cash. Their revenue and employee count both line up. Although remember, this new Main Street lending program only requires that you have either of these criteria match. So either you have less than 10,000 employees or you have less than 2.5 billion in revenue. Now, the last one of the bunch here has also been severely hammered in their stock price, and they need a lifeline. Much like in the event that you need a lifeline or a free quote for life insurance, I think is what I was supposed to say. You could do so using the link down below. You get a quote within 5 minutes. A super easy to use app. I personally have this insurance. Lauren has this insurance. Check that link out down below. But here it is. Spirit Airlines. Spirit Airlines, yes, might be able to access some of that sweet, sweet bailout money from that $25 billion in the CARES Act that was approved for airlines, but you better believe Delta, American, United, and some of these bigger airlines are going to be fighting for every dollar that over and above Spirit Airlines. So this is actually like a safety net to the safety net for Spirit Airlines. Spirit Airlines is a discount carrier though, so they might get smacked by lower prices coming from United, Delta, and American as well. So they're gonna have quite the price war once we all start flying again. But we look in here, it looks like at $14, we are selling for around 2011 pricing. We have not seen this kind of pricing since the beginning and end of 2011, which means all of these gains have just been eradicated, selling for $14, well, I guess now $15 in after hours. Look at that, that's almost a 20% gain on Friday and after hours alone, but still at $15.20. And with a second parachute or safety net, so to speak, the stock looks dramatically discounted from what it was trading for just 2 months ago. Wow, look at that, down 67, almost 68%. Just a note, by the way, Southwest Airlines has 60,000 employees, Allegiant has 4,000, JetBlue 22,000, and Spirit has 7,700, which I believe their revenue is over the 2.5 bill, but they qualify on employee count for this safety net. Now, obviously, should you choose to invest in any of these companies and they go bankrupt, it's not my fault. I am wearing my Berserker helm. I am protected. Don't sue me, bro. So instead of spending money on a retainer for an attorney, join me in my amazing programs down below. Use that coupon code, get yourself a quote for life insurance, get your 2 free stocks with Webull, and
it's gone.